We'll talk about the difference between successful and unsuccessful day traders. What makes one day trader successful and making money on a consistent basis, and a guy is just another consistent loser, losing every time, boom and bust kind of a guy. What's the difference between those two? Successful traders are educated. Educated means what? Not college education. Do not confuse that one. Educated means you understand, you're not just buying blindly. You understand the chart. You understand what the triggers are. You understand where you get in, where you get out, where you protect your investment. Second, and of course, unsuccessful traders are just like, oh, somebody told me, my buddy told me he made $1,000 today, so I'm going to buy the same thing and I'm going to buy and make $1,000 just like him. That's like, okay, good luck with that one. You are prepared. How do you become prepared? You have your trading plan. You know when to get in and when to get out. You're looking at the chart and you wait patiently until a trigger happens. You are prepared for the opportunity. So yeah, a successful trader is being prepared using his trading plan and his checklist to actually do this one. While the unsuccessful, what they do? They wing it. They buy whenever they want. They sell whenever they want. They don't sell at all until it goes down. They just wing it, They are so proud when it makes money. They are completely silent when they don't make money. They mitigate risk. How do you mitigate risk? A successful trader have a stop loss, a hard stop loss on the system every single time. That mental, you're going to hear a lot of mentors saying, mental stop loss. No, a hard stop loss, because a hard stop loss takes you guessing out of it and it just automatically triggers. There's no advantage of having a mental loss unless you've been doing this for 20 years. Unsuccessful traders, they ignore risk. There's no risk. You buy. Why would you put a loss if you know it's going to work? Why would you admit that it may not work if all you're doing is just trying to make money? It doesn't work this way. You learn from failure. How do you learn from failure? Successful traders log all their trades, especially their losing trades. When you log your losing trade, you look at it and you say, there's a section of it saying what errors were done in this trade. You look at it and you say, okay, the error is I moved my stop, or I pulled my stop, or whatever happens, or I got my profits too early. I didn't want to wait for the 3-to-1. That's how you learn from it. And next time you try not to do it again. What do unsuccessful traders do? Same thing, day in and day out. They wipe that account, they refund that account, they wipe it again, they refund it, wipe it again, refund it, wipe it again. That's because they're doing the same exact thing. You always adapt. You probably heard that one before, but in the stock market, you have to have rigid rules, flexible expectations. What does that mean? You buy something and you expect 3-to-1 reward to risk ratio. What happens is it doesn't give you that $3. It only gives you 2. And it just starts going down. The market is telling you today is not the day. I'm going to give you what you're looking for. You just need to move your stop either up to break even or just book that $2 and be grateful you got 2. So you need to be flexible. Rigid rules, flexible expectations. Unsuccessful traders do what? They want the market to adapt to their trading style. This is the best. I want the market to go up. The market is going up. I expect it to go up. The market is going to go up. And if it doesn't go up, I'm going to punch the market and I'm not going to sell. How could you make money with this kind of mentality? You believe in accountability. Yes. If you don't follow your rules, you actually need to go and be accountable and write it down to yourself. Nobody's going to see this piece of paper by yourself. So you need to write it. I pulled my stop because I was afraid to be wrong or afraid to lose or afraid that it might trigger and then it will go shoot right back up. So you need to write it down So next time you read it, right before you start trading the following day, you read it and you prevent yourself from doing the same thing. What do unsuccessful traders do? Random. Everything is random. I don't want to write it. Why would I admit to myself that I made a mistake? It brings an emotional pain that I don't want to. I don't want to deal with it. I don't want. It's not me. It's the market.